Trust. That is the subject of today's video. Hi, I'm Brett Swarts, founder of Capital Gains Tax Solutions, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. And we strive to give you clarity on ways to exit highly appreciated assets using a deferred sales trust so you can create and preserve more wealth or help your clients, friends, and family do the same. You know, we're seeing lots of changes going on right now with inflation at a rampant pace, stock market down, real estate starting to turn with prices dropping in most markets. And the question we're receiving right now from most of our clients and prospective clients is, how do we play defense with the deferred sales trust? And so we're going to cover just a few ways to do that, including asset protection, including diversification, including liquidity, and also including paying off debt. You know, growing up, my wife and I, when we first got married, we took the Dave Ramsey Financial Peace University course, and we read the book, The Total Money Makeover. And part of the reason we did that was to get some clarity on our budget, but also to get out of debt. We were just newly married, and we had some student loan debt. We had a few credit card debt, and we wanted to make sure we started our finances on a firm foundation. And so we paid off about $68,000 in about 24 months, and it was a big beginning of our family. Now we have 5 kids, and we still have this inflexible budget sometimes with everything that's moving along. But part of that was getting out of that debt, created some security, right? Give us the ability to play defense, if we will. Give us the ability to have some freedom, you know, with opportunities that came up. And so this was during the 2008 to 2012 range. Things were really tough, and the ability to be out of debt helped us play defense. So how does the deferred sales trust help you to play defense? Well, number one, it helps you to get out of debt. If you're selling an asset that's highly appreciated or a business and you have debt on the asset, you can sell and not only defer the capital gains tax, but pay off the debt. Now, it's important to understand that if you have debt in excess of basis, and we made a video on this on how to eliminate that challenge when it comes to deferring capital gains tax using what's called a Delaware statutory trust if you're selling investment property. But you can look that up in our Delaware statutory trust versus the deferred sale trust series and that whole breakdown of that. But any other asset that you're selling, if you have debt in excess of basis, the deferred sales trust won't be able to defer that debt, but everything else can be paid off at closing, and all of the capital gains tax can be deferred into the trust, which we call the Dave Ramsey debt-free plan for your highly appreciated business, primary home, commercial real estate, so that you can have a chance to not be burdened by debt, especially if you have adjustable rate mortgages. I'm also a multifamily broker here in Sacramento, and a lot of clients were looking at where their mortgage rates are at right now and when they're set to adjust. Right, a lot of these are fixed for a period of time, typically 5 years or less, maybe times 7. But after that, they adjust, and the question becomes, oh my gosh, what happens when I went from a 3% fixed rate to a 6%? What does that do to my NOI? And so we're looking at those things and planning for that, because this truly will affect those who are in debt. To be able to, those who are in debt are more likely to be in pain should the adjustable rate mortgages happen. And so you want to make sure to be able to play defense with the deferred sales trust. You want to be able to get out of debt. Think of it like a Dave Ramsey plan to lower your risk. Okay, so that's number one reason that the deferred sales trust allows you to play defense right now in a very rapidly changing market. Number two that we love is asset protection. So asset protection is something that's inherently built into the deferred sales trust, because remember, you as the owner who is selling, you're not the owner of the trust. In fact, you're lending the funds to the trust and getting a promissory note in exchange for that. So you're becoming the bank, if you will, and the trust is going in debt to you. And so in this scenario, what does that mean for asset protection? Well, it means if you were to be sued by somebody else for something else, and they were to come after your assets, the only thing they could possibly even get a piece of would be the promissory note payments, right? Which may or may not be paying you out at the given time. We can structure the note in a way that delays trust payments. But the asset itself, you've already sold in exchange for a promissory note. The funds are in the trust, and they're invested into different assets: stocks, bonds, mutual funds, real estate, cryptocurrency, business ventures. You don't necessarily own those assets. In fact, you don't own those assets. The trust is investing into those assets in order to get a return to pay you back. So in essence, you can't be sued, or something can't be taken from you that you don't already own. So it's an inherent asset protection. Now you might say, well, Brad, I do want to invest into real estate or other deals with the trust. Can I do that? Yeah, the trust can become a silent joint venture partner. We have a whole series on that, on how to make the Deferred Sales Trust really be able to buy real estate or business ventures by partnering with you. Make sure you look up those YouTube videos as well. So that's the number 2 reason. So the first one is to get out of debt as a way to play defense. Number 2 is asset protection. Number 3 is liquidity. So liquidity, we believe, is so important right now. Even though inflation is eating up the dollar at this point, liquidity is important because you might have needs for personal expenses. You also might want to be entrepreneurial and be aggressive when prices do drop, right? To buy those businesses or buy those real estate or buy crypto at a discount or buy into the stock market at a discount. So having liquidity gives you the ability to pounce on opportunities. And that's a great way to play defense, is to have the opportunity to play some good offense when it makes sense for you. So liquidity is super important. Where most assets, right, the only way to get liquidity out of like real estate or a business venture is they need to be financeable, which goes back into what higher interest rates hurting the ability to refinance. And refinances are really dropping at this point. And then number 2, the cost of debt as well. And so if you can sell an asset rather than refinancing, right, and having to pay higher interest rates, and you're able to pay off that debt and get the liquidity on the sidelines, you're in a position to really hold off, right? It's like having a reserve account, if you will, right? A lot of clients, before they meet us, they say, hey, Brett, I'm real estate rich, but I'm cash flow poor, or my business is worth a ton of money, but the cash flow is not necessarily equating to the value of the business. I'd like to unlock that capital, or the value of what that capital could be doing for me. In other words, the opportunity cost, right? And so part of playing good defense is having the ability to access the capital in a way which either gives you some protection and some reserves and some time to pay for expenses for yourself or for your business, to also be able to take advantage of opportunity, right? So the last part of this is kind of playing a good defense with the Deferred Sales Trust is also sometimes having an opportunity to play good offense, which is kind of the fourth part of this, which is optimal timing. And in fact, optimal timing is a great opportunity for you to buy into deals when they make sense for you. And that can also help you grow your wealth in a way that further solidifies multiple income streams, which flows into the last part of it, which is diversification. So diversification is a great way to play good defense with the Deferred Sales Trust, because not all your eggs are in one basket. In fact, we did a couple deals recently. One was for a primary home seller in Palo Alto who sold his home about $8 million and had a huge capital gains tax above and beyond his 121 exclusion. He was able to defer his tax. He's also able to pay off his debt, and he's able to get a passive cash flow coming in. So he went from an asset that was producing no cash flow that he was living in, that had a huge amount of equity, that had a huge amount of debt too, by the way, and he was able to diversify using the Deferred Sales Trust, that equity, pay off his debt, and then start receiving cash flow from the trust to live off of. And so that's a great way for you to play good defense, is to have a diversified portfolio of liquid investments and also other cash flowing producing investments, so that you're not tied to just one income stream, whether that be what you're doing full-time as work, whether that be doing from your other investments. Think about your capital always has an opportunity cost, and a good way to play good defense is to be able to diversify where that capital is invested and where those incomes are coming in. In fact, it's said that the average millionaire has 7 different income streams. 7 different income streams. So how many do you have right now? And how many, if you were to sell that highly appreciated asset, use a Deferred Sales Trust, could you open up a couple more income streams that aren't tied to one sector, right? Just stocks, bonds, and mutual funds, or just to your retirement accounts, or just to one cash flowing producing real estate or business, or just to highly appreciated cryptocurrency. In other words, could you sell, could you diversify, create more income streams so you could play a good defense? And so we just covered kind of the top ways that the Deferred Sales Trust can play good defense. You've got to have a plan that helps you to get out of debt, right? Think about Dave Ramsey. Think about ways that you can lower your risk by getting out of debt. We talked about asset protection, right? Ways that if someone comes, wanting to sue you, are they going to be able to get to your assets with the Deferred Sales Trust to protect that? We talked about liquidity. We talked about optimal timing. We talked about diversification, right? And these are all ways that the Deferred Sales Trust can help you play good defense in a marketplace that is rapidly changing, and it seems to be going more and more into a recession. And so you want to be protected. Hey, if we can help you at all, clarify if the Deferred Sales Trust is a great plan for your exit, please go to capitalgainstaxsolutions.com. We would love to work with you. Our minimum size deal is $1 million net proceeds, $1 million gain, but this works for any highly appreciated asset. So you can go to capitalgainstaxsolutions.com. You can also check out the new book that is coming out. It's called Building a Tax Deferred Exit Strategy, and it's a proven playbook for unlocking your ideal wealth plan when selling assets of any kind for yourself or for your clients. That's Building a Tax Deferred Exit Strategy. Look for that coming on Amazon real soon. Hey, thanks so much for watching this video or listening to this podcast. Please rate, review, subscribe, and we look forward to talking